let's go ahead and introduce our featured speaker. So Michael Couch is a financial specialist with a financial legacy management company. He has a long experience in business banking, and currently he works helping lots of different various sized nonprofits and businesses apply for grants, get funding, work on their statements. He's been a mentor at many of our Oregon Rain Mentor Mixer events here in Lynn and Benton counties. And I heard really great things about him from some of the entrepreneurs that did sort of the mentor mixer speed dating events when he would help them with financial statements. And so I was like, hey, we need to get you on a webinar and have you share this with a broader group. So really thankful he's here. Michael doesn't have a camera today, but that's okay. I'm still going to spotlight his video so you can see who is talking. And Michael, I'll be forwarding your slides, but you ready to go?
Certainly am.
Great. So let me, okay, perfect. Well, here is the first slide, so go for it. Thank you.
Well, good morning, all. Again, as Corey said, my name is Michael Couch. Financial Legacy Management Company is my business. I'm just usually not conceited enough to call myself an owner. I think for the most part, the matter of business is very individual. So as such, people have a large opportunity to identify who it is they want to be and what it is they want to do. Business financial statements do come into that in a large spot because business financial statements, though uniform and universal, are very, very specific to the business for which they're created, meaning that everybody has their own style, everybody has their own way. And I am not going to tell you exactly how you should do your financial statements. I'm going to provide you the guidelines. Just so you understand, my background is not a CPA, is not a tax preparer. My background is from banking and looking at financial statements from a viewpoint of a banker or someone who's going to be reviewing documents. Within my business capacity, I also do this as when I do efficiency reviews or when I assist with valuations of businesses. So the way that I look at a business financial statement may be a little bit different from how someone like a CPA or bookkeeper might, and there are multiple ways to prepare them. So everybody is going to have their own style. I'm going to help you go through the pitfalls of things that people fall into when they try to prepare them themselves with a little bit of foreknowledge. So we're going to be looking at tips and tricks to make it easy for you to be able to find your own voice and ways to be able to assist you making sure you don't fall into those valleys of what you should not do. So we're going to start with profit and loss statements, and then we're also going to discuss balance sheets. This covers two of the three forms of financial statements that are most often prepared incorrectly or ones that are easiest to get wrong. We're going to discuss what profit and loss statements are and why it is we use profit and loss statements. We are going to go over balance sheets, what those are, and then why we use balance sheets. Next slide, please. So we are going to start with what you should know as a small business owner as far as profit and loss statements go. So we're going to define them, clearly state how it is that they are most effectively used, and then a few things that they're not used for. Next slide, please. So profit and loss statements, abbreviated as PnL or P&L, they're financial records that summarize the revenue and expenses during a specific period. Now, some people prepare their profit and loss statements monthly. Some people prepare them quarterly. Some people prepare them yearly. I find them most effective based on how often it is you review your books. If you're going to be doing them yourself and you're putting 60 hours a week into your business, you're probably not going to prepare them on a monthly basis. I do encourage people to look at profit and loss statements at least quarterly. Some people only review them on a yearly basis, and there are plenty of people that never prepare them. Ultimately, you're going to choose what's right for your business, but I highly encourage you to have these forms available because they're going to be what will help you figure out how well your business does on a month-to-month or year-to-year or quarterly-to-quarterly basis. They are one of three important financial records for any business. Three financial records generally are used by lenders or investors to determine how well a business is doing. So that includes the balance sheet and the cash flow statement. Again, we will be discussing the balance sheet later. Next slide, please. There are several reasons why we use profit and loss statements. First is they're very useful for comparisons. They allow us to review and see changes and trends over a year-to-year basis, over a month-to-month basis, over a quarter-to-quarter basis. So what will happen is when you have a business review, whether this be through requesting a loan or having a specialist like me come in to do evaluation of your business or a health check for your business, we're going to want to know, well, how are you doing this year compared to last year? How are you doing this month compared to last month? These sorts of comparisons are useful when you're determining if after 2 or 3 years, someone asks, is your business seasonal? You'll be able to have an answer. If you take a look at quarterly and see in the springtime, your business is doing fairly well, but then in summer, you're not, you can then start to ask questions, why is that? You know, if you're a business that relies heavily on tourism, that'll be a really easy way to tell, oh, well, these are going to be my busy months. That will then allow you in an informed manner as a business owner to determine whether or not you would like to save certain months, decrease activity, decrease expenses, because you know that you will not be as profitable during those months. Or if you'd like to be more profitable during those months, it may assist you with finding ways to do that or ways that you can spend more to make more. Important uses of profit and loss statements. You're going to have lenders use this. You're going to have auditors use this. You're going to have efficiency experts use this. Potential investors use this, because profit and loss statements are going to help you determine the general health and growth or contraction and value of your business. So as I mentioned, that includes things like your year-over-year sales, your month-over-month sales, your quarter-over-quarter sales. If you are a seasonal business, it does not help comparing your December sales with your summer sales or your winter sales with your summer sales if those numbers are going to change dramatically because of the season. It helps a lot more to compare your December of 2019 year to December of 2020. That will help show you your yearly growth rather than, you know, how did I do compared to fall when you're going to do much more business in the spring. Next slide, please. Yeah, sorry, yes, the clarification. Y over Y is year over year, MOM month over month, Q over Q, quarter over quarter. So that allows you to compare apples to apples rather than apples to oranges, especially if you're a seasonal business. So there are several reasons why profit and loss statements are not the be-all end-all of financial statements. It's one of the main reasons is if you've only been open for 3 months and this is the first month of you doing a profit and loss statement, you're not going to have anything to compare it to. Profit and loss statements are best used for comparison purposes. Profit and loss statements provide a snapshot of business income, but it doesn't address overall business health and assets. If all you show me as a specialist is a profit and loss statement, that'll give me a small piece of the puzzle to help you determine how your business is doing, what your business is about, but it's not going to show me a whole lot. It is only one step of many useful in determining your financial health. Just like the general checkup at the hospital is going to tell you some information, or if you go to your physician and you get a physical without a blood test, there's going to be pieces of information missing. If you're asking me to help you with your business financial health, that is going to be an important tool, but it is not everything. And the other problem with profit and loss statements is if they're not checked by a specialist, if they're not reviewed by a bookkeeper, if they're not looked at by someone who knows what they're doing, and there are errors, these errors become increasingly complex and problematic if not caught early. And it's going to be the same for pretty much any financial form. That if we are not able to identify problems as they happen, then these problems can tend to grow and get worse as you go. So this is something that does need attention. And as a business owner, what I tell people is it is imperative that you give these financial forms the attention they deserve. Don't shorthand them or just do them with half attention. This is an important component to being a business owner. If you don't or aren't able to provide the attention to these yourself, it's important you find a specialist who can. Next page. So, simple information as it relates to a profit and loss statement. As I mentioned, there's multiple ways to prepare these, and I'm going to walk you through a very straightforward, very simple, very non-time intensive method. And again, this is one of many ways, But I find for most people who are just getting their hang of profit and loss statements, a simplified method works best because it's the easiest to get right and more difficult to get wrong. So at their basis, at the most base level, a profit and loss statement is about explaining where the company made or spent money and how those numbers decreased over the period since the last time you reported. Again, since we are comparing profit and loss statements to one another, it's also important that we keep those consistent, so using the same information. This provides a quantitative, which is a numerical format, and should match the information provided on other financial forms. So I'm going to get into a topic which is a very touchy subject, and that is a term everybody's probably heard in spy movies or Wall Street movies or crime movies called cooking the books. And there are times as a business owner where you'll have to determine what information is most accurate. You will have multiple pieces of information, and it is important to make sure that your information remains consistent throughout. So there are ways that a financial form can be prepared to most effectively present the information you'd like to have going forward. This is an ethical issue. Whichever method you choose that works best for you should be, again, consistent throughout. You can correctly prepare the forms incorrectly, which is not what you want to do. So that, of course, is more along the lines of an accounting class, which we're not here to teach. What I'm going to show you is consistency in preparation when we go through some sample forms. Next page, please. So here is a sample simplified profit and loss. We're going to have 2 of these. And out of these, I'm going to have some questions for everybody. So everybody is seeing the exact same information. And we are going to put on our expert hats now. And I realize that everybody here is not an expert, but these are a collection of data points which will hopefully allow us to answer some fairly basic questions about the business that we're reviewing. So from this sample simplified profit and loss form, we can see that it's prepared with 2 columns. We have a credit column and we have a debit column. This is a method that I would encourage everybody to become familiar with using. This is a very basics of accounting, because what it allows you to do is allows you to review these forms quickly. And if I were to ask you how much the business made, we take a look at credit, which in the case is different than commercial credit or how much money is owed. In accounting terms, credit is money that has been brought in or made, as goes debit, which is money that has gone out or has been paid. So I have this separated into 2 columns. We have a credit column, which discusses revenue, and we have a debit column, which discusses expenses. Now, the revenue can come from a number of resources or a number of venues, and the expenses, of course, goes out to a number of venues. In this, the simplified form, we are taking a look at how much money has come in as a form of gross revenue, and then I have broken down expenses. So if we take a look, we have expenses broken down to multiple different categories, and these are expenses that most businesses would probably have. Some businesses might not have entertainment expenses. Some businesses may choose not to use legal professionals or may not track their printing and stationery. But in essence, these are all business expenses that an average business would probably have. So if I were to open up a question to the folks at home, I might ask, could anybody tell me how much this business spends? And we're going to assume that this is a yearly expense. So this has been prepared for a yearly basis. Can anybody tell me how much this business has spent on insurance for the year? Anybody able to raise your hand? Perfect.
All right,
Yeah,
so yeah,
good answers in chat. 632. That is a very, very simple, very, very straightforward question. If a profit and loss statement has been prepared correctly and accurately for its needs, then any basic, simple question should be able to be answered directly from the information provided. Can anybody tell me if this business's net income is positive or negative?
Looks like some people are saying positive in the chat.
Very good. And that's, again, another easy question. Then is because we have this divided into 2 columns. If net income were negative, we could actually show that under the debt or debit section. Could anybody tell me, in their professional opinion, I'm not going to hold you to this, but would somebody say that this business would be, let me take a look here. Oh, let's try a different question. If this is a 1-year profit and loss statement, can anybody estimate, and if you have a calculator, like this on paper, that's fine. Can anybody tell me how much this business pays in rent on a monthly basis?
$1,200 is the number coming in.
Excellent. So let's take a look here. Wonderful. Why don't we go ahead and move forward to the simplified profit and loss statement to the next slide, please. All right. So we're taking a look at a different profit and loss statement. Again, if you'll note, it is set up very similarly. We have a debit and we have a credit. However, this is a different kind of business. So its exact expenses and the way that it is established will be a little bit different. So as you'll note, again, we have our gross revenue, and then we have the expenses broken down as well. If we take a look again, are we able to determine here if the business is profitable, yes or no? Excellent. And again, as I noted, we have a net income showing negative, which means that taking a look at the credit versus the debit, we can see that the expenses do outweigh what they have brought in. So based on just the simplified profit and loss, if that's all we're looking at, it'd be very, very difficult for us to determine whether or not the business is healthy, because this could just be a slow month. But what we can tell right now is that, yes, the business is negative. Are we able to determine if, okay, Jed, very good question. So on the business advisory, this is an example again of a simplified profit and loss. So there are individuals who will, that's another good question, Shirley. We'll get that one too. So the business advisory services can be a number of things. So if you'll note, we have business advisory and we also have legal and professional. This is a sample of questions that will arise on a simplified profit and loss statement. So business advisory may be something along the lines of what services I can offer. So if someone were called in to do efficiency. On the other hand, this could be what I have seen some folks use business advisory for if they decide to take classes. So if it's a sole proprietor who goes and takes a class at a community college, they put that down as business advisory. I would not necessarily suggest that. That may also be services that are done for if someone's applying for grants, or someone hires a efficiency expert to be able to prepare them for loans or loan requests, which is a whole nother kettle of fish. But in general, business advisory may also be something like having a silent partner on board who receives regular payments for handling all of the quote-unquote businessy stuff. So it is very good that you have questions on what each of these categories are, because each of these categories tells a story without a story being told. So that is a good example of, for example, if I were to be looking at these and I were to be a loan officer, I might say, could you please give me an example of what you spent on business advisory? Identify credits that are not revenues like grants or contributions. So if we take a look at credit, for example, if you do a capital cash infusion as an owner, so if you're putting money into the business, that would show as a cash infusion or as a capital investment. Again, in this particular case, because it's simplified, I did not break down gross revenue. So you can go further with that one, and you can divide that into cash infusions, sales, investments. You can put that in as grant funds. So in this case, we're keeping it simplified because it's a lot simpler than trying to be able to cover all of this in a lot of time. So we're covering expenses today on the simplified, and then assuming that gross revenue, just for the sake of simplicity, we'll say is income from the business.
Michael, it's Caroline. Do you mind if I jump in real quick?
Please.
Hi, everybody. It's Caroline Cummings, Executive Director of Oregon Rain. Thanks for joining us today. And thank you, Michael, for leading this really important topic. I have a question for everybody. If this was your startup, this was your P&L for your startup for year one, do you think that you should continue with year two, just based on this one P&L, just a yes or a no? Awesome. Great. I'm glad to hear everybody say yes, because most startups have a loss for the first couple of years. So thanks. I just wanted to sort of check in on that.
Certainly. If this were a year one profit and loss, this actually is really good for a lot of businesses that are in this particular field.
Right.
So, I would not be discouraged at all. I have had some businesses that have started on the right foot and have managed to be in the black within their first year, but that is not expected. I would say that most businesses that have a good plan, have a good startup, because of all the expenses involved with a year one, their expenses are going to be high and the revenue is going to be low. It's just what you plan for. So why don't we go ahead and we'll have another question here. And this is going, there is no right question. I just want to get you guys into the right mindset here. This is a profit and loss statement. So this does break down where expenses go. Take a look at this, and you can answer if you like, but I just like you to think where, if you're a business owner, you see the possibility for reduced expenses in this. Do you think cutting some advertising might be smart? Do you think reducing your business advisor would be a good idea? Do you think maybe spending a little less money on entertainment might be a good way to go? So Fernando, the question was, if you were the business owner and you were reviewing this profit and loss statement from year one, where can you reduce your expenses? Okay, Sherry says telephone is over the top. So those are some very, very good thoughts. Are you spending too much utilities? We had Nathan say that you're paying way too much for rent. Okay, Jed says business advisory and entertainment. So these are all perfectly valid viewpoints. Understanding that in order to make money, you must spend money is good, but also realizing that it is possible to spend less money is also important. Yeah, if we cut down on the entertainment expense, yeah, this business actually could have been positive. If we found a way to reduce his business advisory services, this business could have been positive. Maybe you didn't need those deluxe business cards and your stationary expenses were too high. So, Jed, entertainment actually is very useful for businesses. A lot of people don't realize that if they're meeting with clients and taking them out to eat, that can go as an entertainment expense for what you spend on your client's food. So wining and dining for some businesses is the norm, especially if it's a sales-heavy business. Yep, having openings with snacks, Jeanette, that's correct. So it is important to know as a business owner what should be included as a business expense, because that will reduce your taxable obligations. You're able to write those off. So there are some reasons to actually have certain things, including mileage on vehicles, especially if you have employees and they're driving around a lot. Those are going to show up. Jed, that is a very, very good answer. And there's several reasons why I haven't provided that yet, because we're going to go over some sample questions here if we'd like to move on to the next slide. We're going to be applying our knowledge. So you guys have seen a couple sample businesses, and here we have another sample one, and I'm going to be asking you some questions. Many of them are similar questions we've asked, but again, I'm going to have you guys put on your auditor hats, and you are welcome to answer questions in the form of how it makes the most sense to you. Is this business net positive or net negative on income? Okay, so this is very, very good for discussion purposes because we have some differences in opinions. Jed, if you don't mind, I'm going to call you out. I would like to know why you say the business income is positive.
Go ahead and unmute yourself, Jed.
Okay, that's faster than typing. I'd say it's positive because the large vehicle purchase is a one-time purchase that is viable for years. So that's a single large expenditure, which shouldn't count against the yearly profitability because it gets amortized over several years.
Fantastic. So so in this particular case, you are both correct and incorrect. That is what I was hoping someone would answer. Jed, thank you very much. You hit the nail on the head. If I'm reviewing this as a loan expert, I would say that this business actually is negative because that was an expense. Now, yes, that business does ultimately show as a business asset. However, that is not what we're looking at. So you're very, very much correct. I wouldn't say this business is in financial trouble, but I would say that this year the business is a net negative because there is a less cash now than there was at the beginning. Now that would change if the business were, if that vehicle were to have been purchased with using business credit, so as a loan, because that would have then changed how it is that the expenses are made. And again, from this point of view, again, Jed, you were very much correct that just because the business has a negative net income does not mean that the business was negative overall. But for our purposes of understanding the profit and loss form, it is important to note that if you were to bring this form in to a lender, they will look at it and say your business lost money. So that's, again, a common shortfall. Yes, very good, Carolyn. It would indeed show on a balance sheet, and we will cover balance sheets here shortly. And so that is one reason, and the reason I wanted to present this one and ask that question is because, again, just a profit and loss statement does not give the full picture of a business. It just shows cash flow. Well, the first step of cash flow, because there's another form which will cover cash flow implicitly. But what we can see here is that the business did spend $22,300 on a vehicle purchase. Thus, the business is in the negative for the year. Again, that's not specifically a bad thing. That was hopefully a business decision that was made intelligently by the business owner. So if I were to ask you, is this business in financial trouble? Correct. And Jed, that was for the exact reason you had mentioned. It would not be safe to say the business is in financial trouble just from looking at this, because we can see that there's a vehicle purchase which was done hopefully with forethought, and that had that vehicle purchase not have been made, the business actually would have had a credit for the year. Now, there are many reasons for this, one of which could include the business owners looking for a tax break, and that'd be a perfect way to, or one of many ways to accomplish it. But also, unless this vehicle was paid for in cash, which is what we have to assume in this case because it should appear, it probably shouldn't have shown up on the profit and loss statement. So we would assume then this vehicle was purchased in cash and not taken out as a loan, because if this business vehicle were taken out as a loan, it would then show differently into the expense as a loan item or a monthly installment loan. Also true, Jed. And that is another thing that you'll have to learn as a business owner is, do you want to pay for things in cash? Do you want to cover them as a business expense in a loan format? And that's a lot more than we have time to get into today. But once you have familiarity with how businesses function, once you're familiar with cash flow, once you're familiar with determining what is going to be the best move for your business, you'll be able to make a more informed decision there. I've had business owners that I actually have encouraged to get a business loan rather than paying for it in cash, even though they have the cash on hand, because it looks better in the long run. But that's a very, very personalized situation. Taking a look at this form, if it is a 1-year profit and loss, can anybody estimate how much this business pays for monthly in taxes? Stanley, I'll address that in just a moment.
Michael, could you repeat that question again? I
apologize. I actually misquoted my question. Could anybody tell me how much this business pays monthly in rent. I believe I said taxes. I apologize. That was a mistake. Very good, Christine. Thank you. So yeah, this business pays $350 in rent or overhead for where it is that they are located on a monthly basis. If we take a look at this, could anybody tell me approximately how much this business spends in credit? How much they're paying towards credit expenses on a monthly basis? Again, presuming this is a yearly profit and loss. Jed, that is how much they pay in a year, correct? Do we know how much they pay a month? Beautiful, Jeanette, 133. So we are now going to go and use some business knowledge, and it is okay if you do not have answers for this. The purpose is to get you thinking like a business owner and someone who's going to be looking at profit and loss statements. Are there anything specifically based on what you guys know about businesses or how businesses function? Is there anything that you guys can assume about this business based on this profit and loss statement? There's a lot of possibilities. There's a few things that I'm thinking of, and you guys might actually think of a couple others that I'm not. Taking a look at this, out of all the things that a business could spend money on, is there anything that's missing? Is there anything that's high? Is there anything that's low? Is there anything you think we can infer about this business based on it? And just so you know, this is an actual, this information is actually obtained from one of my clients. So this is a real business profit and loss statement. Jeanette, very, very good question. The postage is high, very, very high postage. Beautiful. And Carolyn, that is it exactly. This is part of the business model. Jeanette, you got, or Jean, sorry, that is correct. In this particular case, this client of mine was internet sales business. Very, very good. Raj, also correct. There is no payroll, so it is a sole proprietor. There is no entertainment, correct. And yep, there's no employee. It is. So you guys are picking up exactly on it. This was actually a simplified profit and loss statement from a client of mine that does internet sales. Stanley, correct, this is a sales business, or in this particular case, a vendor. So there are no employees. This is a individual one-person run business. And in addition, it is run directly out of the home. If we take a look at rent, $320 a month, this individual is actually paying themselves rent for the space they're using, which is their garage. So you are all very correct, and you all have the correct mindsets for a business owner and someone doing reviews. So in this particular case, Stanley, this individual used the vehicle purchase to purchase a truck, and they were using that as business expenses when they're bringing everything to and from the post office. So previously they had a small little tiny car, and they wanted something so they didn't have to make multiple trips. This person handled distribution for buy mail stuff off of internet purchases. So it is a perfectly valid purchase for the business. That is a very, very good question, Fergus. And these are very important tax questions, and you should consult a tax specialist. Now, I know a lot about businesses, but I do not want to provide misinformation. And Jed, yes, it was a mixture of storage and office. They had their own, oh, yes, sorry. The question was, how much personal use can be made of the truck? And one thing as an advisor is I like to stick to information that I am sure of. I don't want to make a conjecture or an assumption. So really, that is a very good question for a tax specialist, and that I am not. So there are guidelines as to how much personal use versus business use the truck should have, and that is a very good question. Before making any decision like this, you should be aware of that for tax purposes, to consult with a tax specialist. So if we go ahead and move on, or are there any questions as it relates to this first section of applying your knowledge? Okay. Why don't we go ahead and move on to section 2? So here we have another business. And again, this is an example of another simple profit and loss statement as prepared based on a real life client of mine. And we are going to take a look at this individual. What we'll see first is an example of a diamond in the rough. This is a business. This was information that actually they did do quite well. And this one is a monthly. So this is a monthly review. So our last one was yearly. This is monthly. Can you determine for this month that was snapshot, is the business positive or negative? It is. Excellent. Yes, it is. We know that because that's listed clearly for us. So based on the information provided here, can anybody tell me how many employees this company has? Okay. I see a lot of different answers. Technically, all of you could be correct. This is a trick question because a profit and loss statement is not designed to tell you how many employees. What I can say is everybody has really good answers. No is correct. Unsure is correct. 2 to 3, those are all good estimates. If I were asked that question, I would actually go with Christie's of at least 1. Because there is a section for payroll, it is safe to assume that this business has at least 1 employee. All of those are some pretty good guesses. It's hard to say specifically because if this is, for example, a tech company, someone's probably going to be paid a whole lot more than, let's say, if it were a fast food business, just based on market expectations. So that was a trick question. It is not possible to say how many employees, but yeah, I think the answers that everybody gave are perfectly reasonable. At least 1, I would probably say, is a really, really good answer. Do we know if this business has a bookkeeper? If you were to make a guess. That is correct. A bookkeeper could show up under contracted services, yes. Generally, bookkeepers are not employees unless you're doing it in-house, in which case that'd be a manager. But this is another difficult question. Sherry, yes, you could make a line item to differentiate, and you probably should. It could be part of the payroll. In general, I would suggest separating those because payroll is usually for employees that are W-2 or 1099. In this particular case, the confusion is a perfect example because this one was not specified well enough. In general, I'd probably have a bookkeeper under contracted services, but because we don't have a specific line for bookkeeper, it is impossible to say specifically whether there is or not. But there is something on here, if you guys look very, very, very closely, that would tell me that they probably do not have a professional bookkeeper helping them. Here's a clue. What are the total expenses for this business? It's even, yes. It is exactly $24,000. This is a real-life example. Is that possible? Yes. 1 in 100 times. But if we actually were to do the math, and I can expect anybody to, the total expenses is off by $4. This was not looked at closely. And that's the reason why I selected this one. These are real-world numbers, and this is a real example of how a client of mine did a profit and loss statement. And for whatever reason, there was a difference of $4. So that means, can anybody tell me the actual net income? It's not going to be 158. A COG, cost of goods sold, is actually an expense. If you are, let's say, making a part that costs you $7 in goods to make, and you sell it for $10, you can't say you made a profit of $10. You'd say at the end of the day, your net income from that item was $3. So the fact there's a cost of goods sold on here does show that there's actually that this is actually some sort of business that relies on supplies or goods. So the total expenses was actually off. Very good, Ariel. It is indeed. It was the total expenses they overestimated by $4. So the net income was actually 162. So they did better than they thought they did. And really, the whole point of that is to show two things. Number one, having to go back and verify your numbers because they are wrong will take longer than getting it right the first time. But we are all humans and do make mistakes. So this particular entity did all their bookkeeping in-house. They've since transferred to have it assessed every when they send to a bookkeeper to have that viewed elsewhere. So what I can tell you is that some business owners can and do very well handling their own financial forms. Some don't. Okay. Yeah, that is true. In this particular case, I don't think the person did use their formulas. I think if I recall correctly, this is from a while ago, I think they used Microsoft Excel and did not use any summary formulas. Again, QuickBooks, Quicken, there's lots of forms out there that can help business owners. The important thing to remember is there are tools out there, and as long as you're willing to pay for them, they can help you. So Jed, that is a very valid point. Can you guys tell me on this particular form how much this business paid in telephone services? Very good, Jed. That is correct. This particular entity elected to list utility expenses in a lump. Correct. I have some clients that will do just one lump utility. Some will separate to internet, power, electric. You can go as or a phone. You can go as specific as you like, but keep in mind these are questions that may be asked, and if a reviewer doesn't have answers to these questions, it makes it a lot more difficult. Tracking them as utility expenses makes it easy for you to know what are my utilities this month, how that changed since last month. But if you're not tracking individual utility payments, it's hard to tell what's increasing faster than anything else. If we can move on to the next, first, are there any other questions related to this slide? Incidentally, this is for a restaurant. So we're reviewing profit and loss section before we move on for a brief overview of our next topic. Profit and loss review. Profit and loss reporting helps business owners and financial professionals assess business performance, the efficiency and growth, or contraction. So if a business shrinks, it assists us on a monthly basis or quarterly basis or yearly basis of comparing previous months. It is one form among three that help business professionals understand the fiscal health of a business and its individual cash flow thumbprint. So this is only one form that a business professional will use when taking a full stock of how it is your business is doing. And then finally, utilized alone, it does not provide a clear enough picture of a business's operations. Hence some of those questions that I threw in, which we didn't have answers to, simply because that's not what this is for. So the next topic, and that we're going to finish with today, are business balance sheets and what you need to know as a small business owner. So a business balance sheet is a financial statement that presents the fiscal position of a business by showing what you own, your assets, and what you owe, your liabilities, and then also the amount that's been invested into the business, known as equity. That's also what you're left with at the end. Balance sheets, along with profit and loss and cash flow statements, help provide an in-depth look at your financial performance. Next page, please. So, simple explanation, a balance sheet will vary company to company, but whether it's a large capital corporation, a huge Coca-Cola, Dell, Microsoft, or a small mom and pop LLC like the corner store. The purpose is to help determine your base net value of a business by subtracting what you owe from what you make. So values can change rapidly, so balance sheets become less accurate faster than many forms. You prepare your balance sheet to the penny in the morning, and it'll already be outdated by that evening. It's just the way that balance sheets work. However, you don't need to necessarily have an accurate statement every single second of how much your business is worth. Usually, most lenders are okay if it's the same quarter, maybe the same month. So you prepare your balance sheets as often as you need, Ideally, you're preparing on a semi-regular basis. It provides a snapshot of the health of the business, but it doesn't cover events or activities that have contributed to that situation. So what that means is, because we're taking just a single snapshot in time, we don't know how we got there and we don't know where we're going. That's what we use our other forms for, your cash flow statement and your profit and loss. And despite how straightforward these forms are, they're one of the most common that are prepared incorrectly because people aren't sure what goes where. Next page, please. So this is a very, very simplified sample balance sheet, and this is just the assets on that balance sheet. So we have petty cash. That's money that's kept in a lockbox or a wallet or a safe or available right on hand without having to go to the bank. We have 2 checking accounts and we have a savings account. So that tells us that this business has $26,766 on hand, which is a pretty, or sorry, $25,765 on hand. That's a pretty handy sum. We show pending invoices, money that this business has not yet been paid for, and pending service contracts, money that this business has not yet been paid for. These are funds that will be coming into the business for the amount of $6,400. Finally, this business has 2 fixed assets. It has a building worth $144,000, and it has equipment that is a value of $28,500. That gives a total fixed asset value of this business for $172,000, for total assets of $204,165. So that is a very good question, Jed, why a business would want more than 1 checking account. The main thought is that anytime you have a demand deposit account, known as a DDA, that's bank lingo, that you run into the situation of not of having access to your account. If you were to lose one of those checks, you want to have all of your funds in 1 checking account that someone could conceivably steal, because when you file that fraud claim, you're not going to get that money back right away. You still need to have operating capital. And yeah, Corey, there you go. Have a better chance of getting a BP. We're going to have to cut back a little on the questions. I apologize. I've been spending so much time on those that we're running a little bit short on time. These questions, of course, are really, really great, and I wish I had time to answer them all, but we have a little bit more information we need to get through. If we can go to the next slide, please. So here we have liabilities. Now, if we take a look back on the previous page, we saw that there's a lot of money in that business, but that isn't the be-all end-all. Just because the business has a lot of money doesn't mean that it's a positive end to the balance sheet. We're taking a look at expenses. That includes accrued payroll taxes, unemployed workers, employee payable. That's money that those are additional expenses that come out of payroll. We have installment loans. So this business obviously is credit heavy, including revolving debt. So if we take a look at all those and then take a look at fixed liabilities, so depreciation of equipment that it is owned, owner equity, which is one of the most common mistakes I will see. A lot of business owners that know that they need to do a balance sheet but don't know how to do it, I've actually seen them take the owner equity and put that into the assets, which is not the case. Owner equity is money that the owner has put into a business, but still needs to get it back. So it'll actually, on the month it's put in, it will show up in the checking account, but it is a liability that does need to be repaid to the owner. Getting that wrong has huge tax issues. So in this case, we'll see the business has a total liability of $239,053. If we move to the next slide, we see that in actuality, the balance sheet of this, once we take a look, is negative. So we have the assets of $204,165, which is fantastic. But then we see liabilities of $239,053. That shows that there is a net negative for this business. That is not a good position to be in. But for a lot of small business owners, that's where you start. If we take a look at the fact that we remove the owner's, if we move the owner's equity and start to do the assessment of this, we will see the business is positive, but the owner won't be able to get back everything they put into it at this time, if that makes sense. So the $50,000 that is listed as the owner equity is the reason why the total liabilities and equity is negative, which is understandable from a business review point. We can move on to the next page. So this is a general set of business questions that we are going to use to apply our knowledge. When a business manager issues funds to their payroll company to cover wages, what do you think changes in the balance sheet? In this particular case, it's going to reduce the checking account balance. So what's going to change? How much money is in the account. So that will show a drop the next time you prepare your balance sheet. When a general contractor pays for building materials on a 30-day invoice, what would change on the business's balance sheet? Does it affect the overall business net worth? That's going to reduce the amount in the payroll, but it's going to increase assets on hand because that building material is now being held. So the idea is that it will make no change to the overall business net worth because the expense goes out, but you also have the resources on hand. Now, actually, for a short period of time, because you don't because general contractor doesn't have to pay for that for 30 days. If they don't pay it right away, they'll actually show the overall business net worth increasing. But because you're going to have that as an invoice to go out, it's going to balance out. So business cash, the cash flow again is not focused. We take a look at the net assets or the gross or the assets and liabilities in this case. The building material coming in would be the asset, and liability would be the invoice to go out. So that's a wash. When a business owner deposits a check from their personal account into the business account as a capital investment, does that show up under assets or liabilities? I'd like to open this one up to the group. What do you guys think? So, okay, an asset, both. Christine, a liability. Okay, so if, again, we're tracking the business, we're going to track the business. This is going to show up in two places on that balance sheet. Number one, the funds going into the checking account will increase the checking, and then the owner equity on the liability will show up. So again, it's a wash until those funds are spent. So as those funds are spent, it's going to be more of a liability because you're using money the owner put in, but you're not paying the owner back. Will a vehicle change the assets or liabilities if purchased with cash? This goes right back to that one question we started with under the section for the profit and loss. So if you're purchasing with a vehicle with cash from the business, where does that show up? And this is going to be our last question. So what do you guys think? Would the purchase of the vehicle show up under assets or liabilities? Okay. So when it is, Fergus, excellent answer. So there will be a no change overall because the vehicle is going to show up on the assets sheet. We're going to be removing those funds from the checking account with purchase with cash, and will then show up as a line item under your assets, your fixed assets. Now, what will happen is the next time you do your assessment, there will be a degree of depreciation. So right when you purchase the vehicle, it is going to show up under assets, but later it will then count as liability, which will then help with your tax expenses. I really wish we had some more time to go over more of those in depth, but that'll conclude our applying your knowledge. We can go to the next slide, please. So the quick review of balance statements. It helps owners, lenders, and prospective investors by providing a snapshot of a business's fiscal health. Again, like we've established, it doesn't give the full picture where you've come from or where you're going, but it does help at that moment show where the business is asset-wise. It is one of 3 forms that helps the financial professional understand the fiscal health of the business and its net worth at the time the statement was prepared. And that is, again, the key for the balance statement, because, again, it is a snapshot in time. Utilized alone does not provide a clear enough picture of a business operations, just its net worth. Next slide, please. So this is where we have time for the general questions. I'd hope to have at least 10 minutes. I apologize that we ran a little bit long, but there were some amazing questions along the way. Are there any basic questions here? We have a poll going out right now.
If anyone wants to, thank you so much, Michael. Really appreciate it. And I know lots of questions, and like financial statements are not an easy thing to just explain in 1 hour. So while you guys are taking this poll, does anybody have 1 or 2 questions they'd like to put in the chat or say on the video? So there's a question from Jean, I believe is how you pronounce that. The balance sheet did not balance. I thought the total assets had to match the total liabilities and equity.
So that is a very, very good question. And a balance sheet is kind of like a balance on an account. It isn't necessarily about matching assets and liabilities. If it did, then the net value of a business would be 0. So in the case of if a business is doing well and is profitable and has all the assets and equity that it needs, that will by nature be a positive number, showing that there is a value to the business. So the idea is that if at the end, the number that you're left with after subtracting liabilities from assets is a positive number, that means there is a intrinsic value to the business, that the money that it has is more than sufficient to cover what it owes. On the other hand, if the liabilities exceed the assets, that means that the business is in a negative position of owing more than it has value. A lot of businesses operate effectively like that for quite some time. So that isn't necessarily a bad thing. You need to be able to have those other business forms to be able to determine. But what I can tell you is generally the health of a business is much better if its balance sheet is positive. Does that answer your question?
Great, thanks. And so I know there's probably some more questions too, but I know some people need to go because it's the top of the hour. Would you raise your hand or put in the chat if you're interested in us doing another session similar to this, but maybe a deeper dive into some of these topics? Raise your hand or post that in the chat. And while you're doing that, okay, one there. So let us know, and our team will work on seeing what we can do about that. Yeah, it looks like a lot of people would be interested in that, and that's great. And I know there's a bunch of questions. So let's go ahead and close things up. And then I don't know, Michael, how much time you have. If anyone wants to stay on afterwards, we have a few more minutes. Otherwise, real quick, reminder that we do these workshops every Mondays at 2 p.m. and then support groups / seminars like this on Fridays at 9 a.m. So this Monday, I am actually going to be presenting on running a crowdfunding campaign during COVID-19. So we're going to talk about the different options to raise money from a crowd, or as I like to call it, your community, what those look like, and how COVID-19 could positively or negatively impact that, depending on the type of campaign that you are running. If you have any friends who are Spanish speakers from the Latinx community, Ani, who is an entrepreneur and an advisor at the SBDC, she is going to be doing a similar Finances 101 course in Spanish. So please get the word out about that. And then we don't have a specific topic, but just again, we're going to have another support meeting next week at 9 a.m. And so I hope some of you can join us for that. If there's any specific topics that you want to learn about or hear or dive into deeper, be sure to email caroline@oregonrain.org or drop it into the chat. And other than that, that concludes this webinar. Michael, thank you so much for taking time out of your day to share with us. I know you're busy applying for grants and everything.
Well, it was a pleasure to be here today. I actually have no obligations.